Hey everybody, Preston Bryn here with our weekly roundup brought to you by our trader user group. This is for the trading week ending November the 11th, 2016. Well, let's see, what's happened this week? Amazing week here in the United States. Through the presidential elections, the markets didn't do what everybody expected they would do. At least initially it appeared like they would, with the market selling off dramatically in the anticipation of a Trump presidency, but then there was a hard reversal around 3 o'clock in the morning. Excuse me. And then we've just been moving higher ever since. And it's worked out to be one of the better weeks in the S&P 500 since about 2011. It was a really good week, actually, from a price perspective. Now, I'm not talking politically, depending on what your political views are, but from a price perspective, which is what we're all about here in our user group and making money in the markets, that was certainly the case. All of our members were up. Most of our members were in our chat room around 2 o'clock in the morning, 1 o'clock in the morning, making some plays. And if you'd have told me that I would have made most of my money on a long trade in the S&P 500 futures on a Trump win, I would have said, well, I don't think so. But that's the case. That's the way it turned out. We entered long positions and we rode them from Tuesday through most of the week, or Wednesday through most of the week. It was really amazing. What you're looking at here is the daily chart of the S&P 500 futures, and you can see that huge wide swing. But let me just kind of clean the screen up here for you here, get all of this activity off the screen, and you can see the big daily move that we had. I mean, just a huge range in that one day. I mean, we went actually lock limit down. The Dow was down over 900 points. The S&P 500 was down 106, almost 107 points. It went lock limit down, which is a 5% move, until we started getting bids in and moving the price up. It stayed that way. Really amazing. But then once we started moving up slowly and surely, it just kept moving higher and higher. And then once Trump was confirmed, it continued moving higher and higher, and it didn't stop. It didn't look back. And then we moved all the way through the end of this week. Now, what's happening with the markets, folks, is that money is starting to place their bets from a rotational perspective. We've seen some sectors that were favored are now no longer favored, whether it's a dividend paying stocks or utilities or clearly bonds. We'll take a look at the chart in a minute. They're not favored. And other sectors which were not favored should a Clinton presidency take hold are now more favored with a Trump presidency. We see sector rotations clearly in the banks with interest rates. We see banks having a really great week. We see some healthcare and the biotech having a great week. We see industrials and materials having a good week. We see infrastructure type things looking fairly good. We see all of these various plays that are coming here, and you know, we're clearly taking advantage of in our user group. Now, the money is going to be shifting. I imagine a lot of big money, hedge funds that are plus 100 billion, 200 billion, 300 billion hedge funds, and perhaps even smaller. It's going to take them probably a month or two to start laying their bets, but that's what's happening, and that's what we're seeing in some of this rotation here. Some of the FANG stocks, or the FANG stocks plus some of the technologies, taking a hit, profit taking, moving over into other type of plays. Facebook, Apple, Netflix, Amazon, those kind of things are just really, you know, taking a hard move down. So, you know, looking at this screen right here, you can see how, you know, once we came off of these lows early Wednesday morning, and then we just haven't looked back yet. I mean, it's just really amazing. We had this downward sloping trend line like this, and then we had a upsloping trend line like this. And I thought for sure that once we broke this and we were off to the races. And on this daily chart, we actually, down in this area here, actually went below the opening price of the S&P 500 for the year. We actually went into the red for a little bit, for about an hour or so, until it finally caught wind and started moving right back up. So this hard reversal here, I think, caught a lot of people by surprise. But we had some contingent orders in on the futures market, and we just started playing it to the upside, and we caught a pretty good part of the move. So congrats to our members that were making the plays here in late 9 hours. We saw, by the same token, gold that was up over $60 an ounce reverse and move hard back down again. And bonds, they just started moving down, and they've been moving down all week long. It's really been a very ugly week for the bonds, one of the ugliest I've seen in quite some time. And, you know, I don't know if that down move is over. I think there's going to probably be a rest, a little bit of a counter trend move, but then, you know, all bets are off. Now, where can we go from here? I do believe that we're going to start to run into a little bit of difficulty here. If I, you know, just mark the all-time highs, which are right in that area there. Actually, the all-time highs are right there. So let me just click this off here, and you're going to be able to see here. All-time highs, 2191.50 in the S&P 500. I think we'll take that out. The odds favor, but I think we're going to run into stiff resistance up here. And then the markets are going to start getting back into the focus where it's usually been, which is, you know, where are the earnings, where is the global growth story? Because we still have the same issues we had before the election, right? We're seeing a lot of rotation going on, so we're getting some of that, that's for sure. But you can see these blue bars on the left-hand side of the screen. You know, it's the price over, or volume over price. So you can see we're in these two major areas here, which are going to kind of serve as flypaper for price action, trying to get up into areas that we've never been before. It's going to be very hard to hold these prices up here. And then, you know, falling down, we got a big support zone here. We got a big support zone here. I've seen forecasts where people say the market's going to go up to 2,300, and I've seen people say forecasts where the market's going to fall 10 to 15% by Q1 of next year. Now, you know, and let them have the forecast. What we're going to do is we're going to follow price action because it works out very well for us. And that's what we do. If you look at the 200 EMA here, we held up very nicely, which is this yellow line. We held it up. We actually, in fact, as I said before the Brexit vote, or before last weekend, this movement here was very similar to the Brexit vote. We came down and we moved up into the vote, and then it sold off. But unlike the Brexit vote, we moved up in the same night. The Brexit vote hung out and actually moved lower the next day, and then started a counter trend rally until it took out the prior swing there. So now if we look at this, and let me just make it a little bit bigger here, you'll see here that going into the night of the vote, and all the turbulence started, you can see these open and close right there. Okay, so we actually we went into close right here, we moved up, and then we just, you know, once it was seen that Clinton was not going to win, it started selling off the initial reaction. Then, like I said, we came back up and we closed right back up here. But we've stayed in this tight band right here for the past 3 days since Wednesday, and you know, we've been able to, at least in the S&P, come up and approach our all-time highs, but we haven't made new all-time highs here. We're sitting right at that level there. Like I said, I think it's going to be very tough going right in this area. The odds do favor a little bit of a pullback. Now, if I were to put all of my indicators back on the screen again, just to show you where I think we're going to be, you can see the all-time highs, as I showed before, 2191.50, which is this area right here. And notice I've got this huge black bar here, or the black bar, this big color bar here that's running left right across the screen. It's serving as a huge resistance point for us, and I've had it on the screen almost all this year, and that's kind of where we're sitting right now, just slightly south of it. And this is former all-time highs. That's another key point that the markets keep coming back to, 2134. That was the all-time highs we made last May, and it took us over 400 plus days to take that number out. So that's why I think that is also key. And then we got a zone here that's been a pretty good little support zone for us. And then, of course, the 2100 area here. So we're not that far away, guys. We're only about 53 points from 2100. And as you've seen in these movements, we can make that in just a couple of days. I think with this sector rotation, as this sector rotation starts moving out of dividend paying and some of these other sectors like Staples is pulling back a pretty good little bit, utilities pulling back, and some of the REITs pulling back, and then we're seeing, you know, things like I said, industrials and materials and things that are infrastructure related. We've seen huge moves in copper moving through this thing here. So we're going to see where this thing ends up. But I do believe that any upward movement is just going to get harder and harder to grasp. Okay. And it's just going to be, difficult to do here. It's going to be difficult to do. So let's just see where this thing takes us, and then from there, you know, we'll go on and we'll see how it works out. If we look at the and you can see here the 2016 open price, and you can see how we actually went down below the opening price of 2016, actually went into the red a little bit when we went lock limit down, and then it erased itself and we moved on. If we look at the Russell had a very strong day today. I mean, look at this. The Russell actually made new highs for 2016 today, and I'm moving it right up here, right? And we're slightly below the 2015 highs. So we made new highs in the Russell. This is that sector rotation I've been telling you about. The prior high was around the 1262 area, roughly 1263 area. So we just blew right through it. The Russell, just like the S&P, was below the 2016 open price. We went into the red. This shows a risk-on environment where money is coming out of some of the stocks that they've made good profit in, like the Facebooks and Apples and Google's, Amazon's kind of thing, and they moved into some of these small cap and mid cap, and you can see this huge move up here. I mean, we're looking at from south of 1132 all the way up to 1283. I mean, what, 150 points roughly in the Russell. It's just amazing. And this is the Russell now. So and it did it in 3 days. 1, 2, 3. Folks, that is a sector rotation. That is money seeking risk. It is where we're headed. I think there's going to be a little bit of a slowdown here, but it does bode well through the end of the year. If we look at the mid cap, let's look at the mid cap ETF. You can see here we haven't made a new 2016 high, but clearly that's the direction that we're moving in. And if we look at the Dow Jones Transports, right, we're near 2016 highs. Amazing. And you know, we made a high in the Dow Jones Transports actually yesterday, 2016 high in the Dow Jones Transports. And then if we look at the Dow Futures, right, and we come over here for the Dow Futures, we actually made a new high today in the Dow Futures. So yesterday we made 2016 highs in the Dow Transports. Today we made highs, all-time highs in the Dow Jones Futures, E-mini Futures for the Dow. So under Dow theory, that says we are clearly, you know, in this real a bullish environment right now. And a lot of this, like I say, is a lot of sector rotation going on. The other thing I think it's going to do, and I've been telling our members, it's probably going to create more inflation, because Trump, I've been reading stories about it, but I've been talking to our members about this well before the election. If Trump wins, we had a matrix that we put together, I put together for our group, on various asset classes, whether you want to be long or short these asset classes, so that, you know, on the night of the election and going in for the week, we can look at the sector rotation and just follow where the money's going to go. But with Trump, it looks like the bond market is making bets that there's going to be some inflation, and the Feds, yeah, the market's already priced in a rate hike. It's over 80% for December the 14th, which is when the FOMC comes out, and Janet Yellen bellies up to the bar, and she gives us a policy statement and says this is what we're going to do. So the markets already expect a 25 basis point rate hike. But what the markets really want to see is where they're going for 2017. If you will recall, in 2015, in December, almost a year ago today, the Feds came out, hiked the rates for the first time in 7 years or 8 years or so, 25 basis points. But then they came out and said, we're going to raise the rates in 2016 4 times. Well, they didn't do that. This is the first time in 2016 they're going to raise the rates in December, and that's assuming that's what they do. But what the markets are going to look at is what is the forecast for 2017? Are they going to do it 2 more times, 3 more times, 4, or just what? The markets so far have priced in a very dovish Fed. Yellen is on record and she wants the economy to run hot, which means let's run the inflation up a little bit. So what that means is assets are going to start to really start to inflate. And with an inflationary environment, you can see the bonds just really starting to sell off dramatically. And you're seeing this through sector rotation and through a whole number of things. So if you have a combination of easy monetary policy, dovish policy, even a 25 basis point rate hike, interest rates are still at all-time lows, okay? Even with a rate hike in December. And you have Donald Trump coming in and doing a lot of infrastructure build out, spending money on a whole host of things, whether it's from the government side, the defense sector, which is also going to be another sector where money's going, infrastructure sector. There's a lot of money he's talking about spending. And he's talking about reducing corporate taxes to 15%. All of these things are positive and bullish for the markets, and I think they're waking up to that fact. We've got to be careful here. We can get a little bit ahead of ourselves for prices, as the markets always do, as you probably know. They always overcorrect both to the upside and to the downside. So we can expect, if we just do this trek for another 4 to 6 weeks or through the end of the year, you can expect a pretty good little healthy pullback. Not a bearish market, but a little bit of a pullback and a consolidation. Let's scare the children a little bit, and then let's kind of consolidate and then figure out what we want to do. But right now, it's just, you know, this is where we're headed, guys. It's a pretty strong price action here. Again, I would not be surprised to see, and this is the Dow, but I would not be surprised to see us come up, make a new record, pull back, consolidate, and then make another run up, like something like that. But any pullback that we have is going to be limited for now, okay, unless there's some existential threat that pops up that we're not aware of. If you look at volatility, it finished this week back in our green zone, back at the VIX closed at 1417, okay? So you can just see this huge downward move in the VIX right here. Now, we played VIX to the upside here. We had a lot of fun with this, made some good money, and we got our profits out right there. But you can see this big move back down here like this. We may drift down a little bit until we start to make another move. But right now, I just think that it's going to be pretty serious money moving around, getting into some of these sectors that I just mentioned. If we look at the bond market, which to me is just fascinating, this thing is, I mean, it's a rocket ship to the downside, okay? Now, we're playing a higher interest rate environment. One of the plays that we've got is in TBT to the upside. And we've been in it for a while now, for about 3 months. So we've had a pretty good run in TBT, just a really great run. And you can see here in this that the bond market is coming down to the 2016 open price, which also happens to be right around the low for 2016. And we're down here now. And there is no divergences down here that would indicate that this rocket ship to the downside is going to get any lift anytime soon. We may get a little bit of a lift and a little bit of a consolidation, but I think when the Feds come out in December, now understand they may come out, hike the rates, and give us a dovish sentiment for 2017, and that'll put bonds back up in this area here, near the 160 area. But I am going to be shorting the heck out of bonds if we do get a rally up into this area. Okay, I don't see it, guys. But that's where we are with the bond market. And then, of course, with the currencies, we've been bullish the pound, and we've been playing the pound bullish off of these lows down here. I think it's going to start to run in a little bit of an issue here once it starts getting up, you know, around 128, 129 area. But then once we get out of that, let me just get this off the screen. Once we get out of that, then I believe we'll have a little bit of a pullback, a little bit of a respite, and then higher. I have been saying to our members for at least 6 months now, the pound is just going to be a great trade post-Brexit. It's going to be a really good trade. I think it'll get back up into the 130s and then just take off from there. Right now, it's still a little bit choppy, but we've been playing it to the upside, like I said. The U.S. dollar, well, the dollar and the currency is following exactly along with the markets, right? The markets. You can see right here, we're coming up here to a key level with the U.S. dollar, right in this area here. If I put it back on a weekly chart, just step it out just a little bit, you can see here where we're sitting here. I do believe, excuse me, I believe the dollar is going to come up to 100. Excuse me. I believe the dollar is going to come up to 100 and challenge this. And then if Yellen comes out and indicates he's going to be a little bit dovish for 2017, I think the dollar is going to give it back up. By the same token, the euro is just the opposite. Euro's selling off. You can see here on this weekly chart how now we've made a new, we're actually in the red for the year for the euro. I'm heading to Europe this weekend. I'm going to be over there doing some seminars for about 3 weeks, but you can see here on this chart, just the euro was up over $1.13 to the dollar right here, and then it just came crashing down, came up and hit this level right there, and then it came right back down. We're now back down into the red. Let me get my sub chart back up for you guys. Came right back up in the red. I think what may happen, now what could be an ideal scenario is the euro comes somewhere down in this area here and then it starts to catch a bid and move higher. Then I'd be more interested in taking a long in that area right there, assuming we get a cross here and it gives us a setup for a bullish divergence. You know, the other alternative is the euro just starts going down and it keeps going down and then the MACD continues down like this. You know, and then when it starts to go up, we got to cross there like that, and then there is no divergence, which says any up move right here is a bull trap, and it'll probably roll right back over and come below that, the 2016 low. So we're going to be watching these currencies. I told our members the year 2016 is going to be the year of the currency. 2017 is going to be kind of like the reintroduction of inflation to traders. We haven't seen it in a long time. And it's going to come out, and there's going to be some opportunities in that trade. Look at copper. Copper has been on fire here. Now, copper is part of the infrastructure build out, and that is why copper has just taken off. I mean, it started moving up, you know, well in advance back in late October. And then boom, we just had this huge move up and then kind of an exhaustion move here. I think what's going to happen with copper is, you know, with this move here, it's going to come back and settle down, gain some steam, and then poof, away we go again, and we'll challenge that area up there. So right now is not the time to go long copper. But you can also look at JJC if you can't trade copper futures, same thing. Same type of trade, or Freeport-McMoRan, which is another way of trading it. It's a stock and it's not that expensive. So these are just some ways to play some of the industrials if you want to. Gold, meanwhile, went down almost 40 points. We had a clear break here in gold. This was an ugly break. We broke that area right there. I've said, you know, when we had this move up here and we started to show some lift, I said, well, we could get a reversal and start moving higher if we can clear the 1300 area. And we never really could, right? I mean, you can see right there. And yeah, we got up there with when it looked like Trump was going to win. And then once the markets realized that, hey, wait a minute, we don't hate Trump. We like Trump because he's good for business, because he's going to create make it a lot easier, reduce taxes. I mean, all the prescription things that companies like, right? So the markets immediately started moving higher, and gold just, you know, it just gave it up real quick. So we're coming down to this area, which was kind of like my original projection, which is one of the key pivots right there. Okay, and then we're going to see where we want to go from there. I think longer term, gold is going to be a good play. But I think near term, no. I'm still sticking to my forecast for the next year to year and a half. We're going to have a 25 to 40% pullback in the markets. I don't think it's going to start by the end of Q1 this year, but again, that's just my guess. We're gonna follow the price action wherever it leads us, but right now all price action seems to indicate that massive sector rotation is on. A lot of money is being shifted around because the markets did not expect Trump to win. And so all the money was allocated in other areas, or at least 70% of it, right? Now that Trump's won, you're seeing some markets finish up 150 points and other indexes finish in the red. And you're seeing these huge differences. And that's just because money is going from one area to another. So that's why I'm saying, well, at least the money is being deployed in a long perspective and profits are being taken. So it's not like everybody's going short. Which means that we're not going to see a big pullback at this time. Most of any pullbacks on any of the indexes right now are mostly due to some of the rotation and some profit taking. So that's kind of where we're sitting on gold. Energy and oil, well, oil just can't get away from itself. We were able to clear the 200 EMA, which is this yellow line, and then we came right back down again. If we break 42.55, we're probably going to come down to 39.19, okay? And there is no bullish divergences in this at all. There is just an abundant supply of oil, abundant. Now remember, November 30th, we got OPEC meeting in, I think, Algiers, and they keep saying, you got to believe us, guys, we're going to cut production. And OPEC just came out and said, hey, guys, if OPEC doesn't cut production, there's going to be an abundance of oil. Even in 2017, we thought inventory levels would be moved down to normal levels and there'd be normalization by the summer of 2017, but no, that's not the case. Inventory levels are going to be high through the entire year of 2017 unless OPEC cuts production. So now, the IEA, that's the way they set up the meeting. Let's see what happens. This thing could go up or down depending on what OPEC does. If they can't come to an agreement, I believe oil is going to go back sub 40 again. It's about as simple as that. All right, everybody, we got a lot of other things going on in the market. We got a lot of sector rotation for our members. I'm traveling this weekend. I'll be unavailable Sunday night, but we will pick up our weekly pre-market sessions Tuesday morning. If you're not a member, I highly encourage you to come in. We're having a great year. I think the rest of this year, November, December is going to be pretty exciting, but I think there's still a lot of surprises and fun for 2017 that are coming up. So I hope to see you on the inside if you're not a member. If you're a member, I'll see you this Tuesday morning. Have a great weekend, everybody, and I will talk to the remainder of you next weekend with our weekly roundup. Okay, guys, have a good one. Ciao.